Hello, I'm Bernard Mathis. You're watching Mathis Financial Services. Hello, this is Bernard Mathis, Mathis Financial Services, and today we're going to talk about long-term care and disability insurance. As I said, today we're going to talk about long-term care and disability insurance. Long-term care insurance is an insurance that pays when you really get sick. Most of the time it's a person who's elderly, having Alzheimer's or all kinds of other health issues, and they need somebody to come take care of them. That's the true essence of long-term care. Now, long-term care can be done in a couple of ways. It can be done at home. You can have a person come and take care of you at home. Or if as it goes and your illnesses get more complicated, then you may have to go to a facility. Now, let's talk about who's going to be your caregiver. Your caregiver or caregivers in general are ladies, and normally the position is that they're ladies with 2 children who work a 40-hour job and take care of kids and become a partner in your long-term care position. Now, that sounds kind of rough, but that's just the way it is. Unless, especially unless you're at home. Now, when you're at, and that's in that home environment, because you may have some other relatives that come over and help you and stuff, but normally you're at a total disadvantage health-wise, so you can't really take care of yourself. And the other thing that happens with that too is that usually a lot of persons don't have long-term care. They've talked about long-term care. They're saying I never need it because they all have all these family members who stepped up and said, I'm gonna come take care of your auntie, your uncle, or whoever. But in true life, because they have obligations, then let's say kind of in a joking manner, when you get sick, you got a house full of people. They're bumbling into each other. 6 months later, you can't find them with a police dog. That's a joke. But true as it is, true enough, unfortunately, you can't find those persons because they have locked up stuff in their own personal lives that they now have to take care of. They can't. They can come for a little while, do some stuff for you, but they've got to go back home and take care of their own families. And so, what long-term care does, it actually pays for a person to come and consistently work with you. You may have a copay, but long-term care actually pays this person to come and sit with you, fix your food, take care of you in whatever manner is necessary, and go from there. But wait until they have issues before they start thinking about long-term care. And usually, long-term care, the perfect time to buy long-term care is when you're in your 40s, 50s. When you start talking about a long-term care when you're in your 70s, then you're talking about it's a note. It moved from a little bill when you're in your 40s and 50s to becoming a car note, if you would, when you're in your 70s. That's even if you can get it. Because when you apply for long-term care, you can't be sick. You still have to be healthy. You can't have any cognitive diseases or any other heart failures and things of that sort. And also, in order to qualify for it, you still have to take a cognitive exam. So somebody calls you on the phone, asks you a bunch of questions, you have to reply. If you reply wrongly, you're denied the contract. Or if you say, well, I got a little heart failure or something else, they say, well, you can't buy this contract. So you're stuck. Now the family needs to get together, has to get together in order to deal with your care. Now disability insurance is a little different. Speaking of long-term care, normally when a person starts the mental conversation or even the conversation about long-term care, is they're thinking about somebody in their 60s, 70s, 80s, all kinds of things of that sort. But the average person in a facility is a 42-year-old. Disability insurance, totally different than long-term care insurance. And the reason I said it is because disability insurance deal with your ability to work. Let's say that got up on the roof, doing some work, you fell off. You can't go to work. You can't apply for workman's compensation because you got hurt at home. So you can't go to work. Tell them you fell out of your chair at work and file a disability claim. It doesn't work. But if you have long-term disability insurance, then, or actually, let me back up a little bit. There are actually two types of disability insurance. There's short-term and there's long-term. Short-term meaning that if you have a disability, then a salary would be paid, a specified amount will be paid, but it's only paid for a 6-month timeline. And once you go through your 6-month timeline, then you'll have to make a decision as some other things that might come into to work for you to continue receiving disability pay. You have to go and file disability with the state of wherever you are. Long-term disability, you decide how long you need or want to be paid. And that shortest time frame is 1 year, and potentially the longest time frame of payment is 5 years. So it also, not only would it pay you, even though you're up there playing carpenter on your roof, but let's say you're an insurance man like me. What it does then is it looks at your occupation, or in fact, the premiums that you pay are based on your occupation. So you're gonna get 60 to 70% of what your pay is, and also the timeline is different. And you decide, okay, well, I got short-term disability at work. I won't need to get paid, or I've got money in the bank. I won't need to get paid until a 90-day period goes by. And I need to be paid for at least the next 5 years. Well, disability insurance will pay you starting in 90 days and pay you over a 5-year timeline. But it also has a caveat that the short term does not have. In the short term disability, it has a caveat that if you became disabled inside that 6-month timeline, then your occupation insurance is not protected inside of that short-term disability product. In the long-term disability product, so you're a doctor, nurse, insurance man, whatever, your occupation is protected, meaning that when you come back to work, they'll even have to send you to school so that you can get another profession or add to the profession you have, so that you will come back to work in full, respectable working condition. That's the difference. And a lot of companies have the short term, which is fine, but mostly people don't talk about long term. Something where many years ago, a classmate of mine's husband fell off the roof. He had short-term disability, evidently, because I didn't get the full story, but they needed help. And they couldn't get all the help they needed because he had that short-term disability, and they didn't pay but for a short time frame. But long-term disability pays longer, protects your occupation, and you can even buy a product that if you should never become disabled at 65, they'll pay you 50% of all premiums you paid into it back. You'll get a refund for not having an injury. So let's say you're a doctor and you hurt your index finger. You're a dentist, hurt your index finger. So now you may have to change occupations because you can't be a good dentist because of that finger being injured. So now, let's say they may send you back to school, and even let's say that your pay is going to be different. So then your long-term disability will even come out and cap your pay back to what it was before you got the injury for a couple, 3 years, depending on how you sign up for the program. So, you see all these people who've gotten hurt. Lawyers come out the woodwork. Oh, I can do this and I can do that. Well, during the time that you're disabled from that injury, a car wreck, whatever, they're not writing a check for you to get well. But if you had long-term disability, it would be paying you a check while you're sitting there or laying there, whatever the case, while you're waiting on your lawyer to win your case. And you've also got to remember, too, in that effect, lawyers come out of the woodwork, tell you they're going to get you this $1 million. What they need to ask, one thing for certain, is that what is your percentage? Because in my experience, right now they're normally getting about 45% of that $1 million, and you have to pay the hospital and all the other little pieces of the puzzle. So something to think about. And like I said, most people don't talk about long-term disability because you see all these commercials where whomever these animals are on television saying, "Get us, we're gonna take care of you." Now, one thing about long-term disability, if it's a lady and she gets pregnant, with the other one, short-term disability will handle pregnancy. Long-term disability handles complications from the pregnancy. That's the difference. But like I said, disability of some kind is good, but you need to start asking questions about long-term disability, so that if you have an existing long-term existing situation, because I bought disability many years ago. In fact, it's comical because I wanted to be a scuba diver, and I knew that there's a possibility that I might get hurt on my job, so I bought long-term disability. Never got hurt, and yes, I did get a refund. Thank you.